Hello friends, are we getting ready for good and services tax? Yes, we have to. It is all set for implementation from July 1st, 2017. The goods and services tax will be the most considerable tax reform in the economic history of India. It will have an impact on prices, business processes, investments and profitability in all parts of the economy. It will also necessitate a paradigm shift in the way tax policies are made in the country. It is like rejuvenation of Indian economy. It is imperative for us to understand features of goods and services tax. Our course is structured in 4 modules. In Part 1 module, we are giving a brief of tax phenomena and current tax structure. In second module, we are dealing with features of goods and services tax. This is Part 1 module of the course. Here, we shall be able to understand fundamental of taxes, changes with respect to current, indirect tax structures, basic structure of goods and services tax, what are the taxes to be subsumed under goods and services tax. In Part 2 we are covering features of goods and services tax. In Part 3, we shall cover effects of goods and services tax on various sectors in general. In Part 4, we shall deal with challenges and procedural changes in implementation and compliance to goods and services tax. We can see our objective picture. There are different layers. As our arrow is reaching towards inner layer, it is becoming more dense. Similar case with our goods and services tax provisions, articles and essays are available on various sources. Only thing is to generate interest and learn basic concept behind it and reach our objective. Let us start from elementary level. We all are aware that tax plays a vital role in our day-to-day activities. We can understand any tax by answering 5 questions associated with it. These questions are what, why, who or when, and where. It means that if we can answer these 5 questions, we can understand tax. One more trick can be applied to understand tax. Tax consists of 3 words, tax. It can be interpreted as T is for take. If someone is taking something, it means someone is giving. A for adjust and X for cross means no or exempted. Very interestingly, for any tax, generally, 3 cases are possible. It can be taken or given. It can be adjusted or credited. Or it can be exempted. Now, let us see all 5 questions. First question is: what is tax? Taxes are generally an involuntary charge, which is enforced by a government entity, whether local, regional or national, in order to finance government activities. It is levied on individuals or corporations or firms against their income, against sale or supply of goods and services, and against actions or events like import, which are notified under the law. Now, the second question is, why tax is imposed? Tax is imposed for financing the business of the government. What are the examples of business of government? Examples are defense for all, means protecting our sovereignty, maintaining law and order, all developmental activities for public there are numerous activities to be dealt by government for the benefit of public. In return of their benefits, they are charging tax. Now, next question is, who levy the tax and who collect the tax? This is clearly notified under the law. For example, at present, financial power between the center and states are precisely written in Indian Constitution. For example, the center is entitled to levy tax on manufacturing of goods, except alcoholic liquor for human consumption, opium, narcotics, etc., while the states have the power to levy tax on sale of goods. In case of interstate sales, the center has the power to levy a central sales tax, but tax is collected and retained by the originating state. Center is empowered to tax for the services, that is service tax. Next, question is when the tax is to be collected. There are many events or actions which are taxable, for example, event of import, action of sale and supply of goods and services, transfer of rights, etc. Taxable events and taxable actions are clearly mentioned under the law. And the last question is, where the tax is to be collected. It is the most important question. In fact, a particular tax is confined to a particular territory only. For example, a village panchayat is charging entry tax for all the goods entering into its panchayat territory. They are not empowered to levy any tax on goods entering into other village panchayat. Generally, taxes are classified in two types, namely direct and indirect taxes. These are defined according to the ability of the end taxpayer to shift the burden of taxes to someone else. A direct tax is imposed directly on the taxpayer and paid directly to the government by the ones on whom it is imposed. It cannot be shifted by the taxpayer to someone else. In simple words, this tax is borne by the same person or firms who pays it. Examples: corporation tax, income tax, gift tax, wealth tax, etc. This form of taxation indicates social justice, as it is based on the ability to pay. The economic situation of persons determines the rate at which they are taxed. Also, the progressive nature of direct taxation can help reduce income inequalities. This is well depicted by the slabs and exemption limits for different sections like women, individuals, and senior citizens. Indirect taxes. An indirect tax is a tax collected by an intermediary from the person who bears the ultimate economic burden of the tax. It can be shifted by the taxpayer to someone else. In simple words, it is not borne by the person or firms who pays it. An indirect tax may increase the price of a good so that consumers are actually paying the tax by paying more for the products. Examples: customs duty, central excise duty, sales tax, service tax, value-added tax, etc. Generally, it is regressive in nature. Indirect taxes do not discriminate between rich and poor. Burden of indirect is same on rich and poor. Indirect direct tax is tax on consumption. They affect inversely to lower income group. Goods and services tax comes under indirect tax. Our module scope is limited to indirect tax only. We all are already paying various taxes. Every citizen of our country pay tax. Is it true? At the same time, we know that very less, that is, in the order of 3 to 4%, citizens only pay income taxes. Yes, many people might not be paying direct taxes, but in case, if they have ever bought anything from any shop in their lifetime, they have paid a share as sale tax to government. If they ever had joined any coaching classes or had food from an AC restaurant, or availed any professional services, they might have paid service tax too. We can see in the picture that people with low income group is thinking, we are not paying any taxes, how goods and services tax will affect us? This is false. Goods and services tax is concerned with every citizen of the country. We can also see in the picture that salaried class group are thinking, we are already paying so many taxes, now we have to pay one more tax, that is, goods and services tax. Again false, goods and services tax is not additional tax, instead it is an amalgamation of a large number of central and state taxes into a single tax. Before going to goods and services tax, let us understand in short, indirect tax system of our country. India is a federation having a federal constitution. The essential feature of federal structure is division of power. In a federation, there are two sets of governments. The Union, 29 states and 7 Union territories derive their power from the Constitution. Financial power is also one type of power, which is shared between center and state. Taxes are being levied or collected only by the virtue of constitutional power given to center and state. No tax may be levied or collected except by authority of law. The table shows the present system of indirect tax structure in India. Indeed, multiple indirect taxes at central and state levels. All the taxes mentioned in the table, except basic custom duty, R&D cess, and all local bodies taxes, will be subsumed in goods and services tax. Here, we can see that there are multiple indirect taxes at central and state levels for multiple taxable events. There is absence of uniform classification principles, which leads to difference in tax rates for same or similar commodities in different states. There is a manifestation of cascading effect, as central and state taxes are not recoverable against each other. There is no cross-utilization of taxes. For example, we have produced equipment from a factory located in Bhopal, so excise duty will be levied on that equipment. If that equipment is sold in Punjab, then CST will be levied on equipment value plus excise duty. Now if that equipment is resold in Punjab, then VAT will be levied on whole value. At this point, we cannot get tax credit of earlier paid taxes, as there are different authorities to levy taxes in this case, one is center and other is state. We can address all these issues in goods and services tax. Biggest advantage for any organization by implementation of GST is seamless input tax credits. Since there will be only one tax, goods and services tax, so in case of resale, as GST is already levied against that equipment, there will be input tax credit of previous paid GST by setting off paid tax value in final liability. We can visualize some of the limitations of present system. In present system, there is no mechanism for cross-utilization of credits between state and central taxes. Getting input tax credit for interstate trade is also difficult. There are administrative difficulties in compliances. In present system, one has to file multiple returns. Present IT infrastructure is also not adequate. Goods and services tax will be applicable to supply of all goods and services except alcohol, for human consumption, in which tax levied will be VAT and excise duty. Petroleum products, in which tax levied will be VAT and excise duty. Tobacco, in which tax levied will be excise duty and GST both. Real estate, in which tax levied will be stamp duty and property tax. It is a move towards one nation, one GST and one market. There will be only one registration number which will be used for filling return on a timely basis. The biggest tax reform to usher into new era. In this, we are heading towards economic union. This is the beginning of new era in taxation and best example of cooperative federalism. Thank you. Our next module, which is part 2, is on features of goods and services tax. It will boost export and manufacturing activity, generate more employment and thus increase GDP with gainful employment, leading to substantive economic growth.